Chiang Global House of Global is Thailand's leading one-stop destination of all types of construction materials and decorative items. However, right now, Global is at a crossroad, confronting booming challenges and awaiting opportunities. Ladies and gentlemen, we are issuing a whole recommendation on Global with a target price of 17.3 baht, representing 7.9% upside. Our prudent stand is due to four main reasons. First, the excessive number of SKU. Second, the continuing decline in same-store sales growth. Third, the weak economic conditions. Despite the three challenges, there are opportunities for growth for Global, from store expansion and higher gross profit margin through their house brand products. In 2022, 60% of their revenue generated from the decorative item, while 1/3 came from building materials. Additionally, Global customer base mainly focused on low to middle income households. So that's why 60% of their branches concentrated in the northeastern and northern area. So, what are the key challenges that Global faces nowadays?
The first challenge is about inventory. Currently, Global has a market share of about 4.8%. Global offers 290,000 SKU, significantly more than its competitors. Additionally, Global has carried a large number of house-brand products, increasing its gross profit margin. However, this trend is showing higher DIO than its competitor as well. The second challenge is about same-store sales growth. The price of construction materials, especially steel, has increased due to the real estate crisis in China. This has affected revenue in the construction materials segment of Global. Resulting in decreasing same-store sales growth for the past 4 consecutive quarters. The last challenge is about consumer purchasing power, especially in the agriculture sector, which is the main consumer of the Global, is still weak. Farmers' income has decreasing due to the lower of volume products, and this situation led to the fragility of our country's purchasing power. It's not expected to recover until the middle of 2024. Furthermore, the household debt to GDP at 90% reflects the limitation on purchasing power. Despite government efforts to stimulate the economy, purchasing power remains restricted. It's hindered by the uncertainty economic and uncertain government economic policy. Why is Global still interesting?
First, despite facing challenges, Global continue to expand its branches every year. We expect Global's will add approximately 3 branches per year. However, this is a categorization because Global covers 62 out of 77 provinces in Thailand already. Therefore, same-store sales growth will continue to increase at slower rates. However, Global CAGR has been for the past 5 years has been at 8%, while forecasted growth is expected to be at 5%. Another opportunity for Global is gross profit margin through the house brand product. Based on our irrigation analysis, a 1% increase in house brand product will lead to a 0.3% increasing gross profit margin. Moreover, Global subsidiary Guangxi International located at China enhance their supply chain.
Finally, the quick win is in DE ratio, which is lower than its competitor and industrial average. This provides potential for leveraging debt and increase company return on equity. Let's talk about 3 assumptions that enhance our whole recommendation. Despite decreasing SSSG and increasing in store count should keep sales stable, while a higher proportion of in-house brand continue to boost global profit margin. Finally, low DE ratio present opportunity for new investment and cost of capital reduction. Focusing on our valuation analysis, we set a target price at 17.3 baht, indicating 7.9% upside. Our sales drive forecast considers steel prices and economic growth. The assumption in our valuation include an 8.3% WACC and a 1.9% terminal growth rate. Our sensitivity analysis indicates that if the WACC and terminal growth rate deviate from the base case, the target price is expected to range between 15 baht and 19 baht. To reinforce our recommendation accuracy, we employ multiple valuation methods. For example, EV/EBITDA ratio point to a broader valuation spectrum with an average of 14.6 baht. In addition, the outcome of Monte Carlo simulation for global price distribution show 46% probability of matching our target price of 17.3 baht. We perform scenario analysis. In bull case, if digital wallet we launch and Thailand economy outperform expectation, we foresee global sales rising by 6 billion baht in 2024 with a 10% revenue increase from the base case in 2025 to 2028. This translates to a potential target price of 19.3 baht. The bear case scenario recognizes risks such as the volatility in steel prices, global conflict, and China real estate sector crisis that could potentially reduce target price to 13.3 baht.
Next, we have pinpointed 2 risks. The first one is unmet new store performance target. When the construction of new store requires an investment of 300 to 400 million baht. Second is the risk from the product obsolescence that caused by the high level of inventory. Now let's take a look at their ESG. Global Sustainable Development Policy anchored in balancing social, economic, and environmental aspects. This initiative have elevated it global into AA rating in SET ESG index. On the positive side, global is leading in multiple key sectors, such as energy management, data security, and employment practices. However, there are areas that global lag behind. This includes sustainable products and board composition. So, a robust ESG can reinforce the revenue, cut costs, and also boost the shareholder confidence. So, ladies and gentlemen, global faces significant headwind from the extended DIO period, the declines in social growth, and the weak economic conditions. Despite these challenges, global is positioned for growth from the store expansion and higher gross profit margin. Therefore, we restate our wait and see recommendation on global. Thank you. Now the floor is open for the Q&A.
I'm confused. When I'm looking at the recommendation, maybe this. Okay, let's I frame it in a bit concise way, right? When you make presentation, you highlight a lot of weak point, right? SSG is going down, weak consumer demand, economy is bad, right? And at the end of the day, when I'm looking at the upside and downside case, it looks like the blue case scenario has more upside than the downside. In one of your presentation, if I mistakenly take it, upside case is up 20%, downside case is down like 13%. Is that correct? 16 and 20. So it means like you're on one end you seem pretty bearish. I would have asked you like in the first place, why wouldn't you sell it? But when I see this, oh, should we buy it? So that's why it's
products mix around 15% of the revenue come from the steel. But for the gross profit margin, we don't have enough information to calculate that.
And what is your long-term number of stores for global in Thailand?
Around 100 stores for
around 100 stores in 2028. And then after that, how many do you expect from that point? We expect the new store will open lower than 3 branches per year because the area to open it may be the same area as previous store located.
At the end game, like let's say 30 years from now, how much potential do you see in the number of global stores in Thailand?
So in the long run, right now, Global expand its store with the really high scale store. With the high scale store, we don't think that they have much potential in the long run. But if they focus their strategy into smaller store, they still have like the provinces that we do the analysis for that have potential for the area for them to build their new store. For example, we have like 3 cases. The first one, it would be the provinces that Global haven't had their branches in that province yet. And then the second category is like the second store, would be the second tier customer for them, and then the third tier. So in the long run, of course, with the big scale, it's gonna be less than 3, 1, or like 1 store, or even no potential anymore. But for the small store, we think like this list would be the potential one.
And you mentioned the currently Global have an inventory problem and may face the product obsolescence. How much is the impact to the margin in 1 year?
Can you go to the investment risk? Excuse me, can you evaluate your question one more time, please?
You mentioned that currently Global have the high inventory days problem, and what will be the impact to the margin from this problem? What will happen from having high inventory days to Global?
So having high inventory day is followed by the additional holding cost, which increase the cost of goods sold, so that will affect the gross margin, and then moreover, Global seem like they don't have like a solid plan to reduce their inventory because they're really proud of their number of their excessive number of the SKU. So that would impact like greatly in the future of the gross profit margin if they don't take action on this area.
Another thing is, I think it impacts working capital to be higher than competitor. So they have to finance short-term financing the company, so the interest rate, the interest may be high more than competitor.
Did you check the historical inventory write-down? How much it contribute to the total cost of goods sold?
No, we haven't checked it yet.
And you mentioned about the MCS, the Monte Carlo simulation. How did you come up with the result? What are the factors that you sensitize?
The assumption is already the historical price and the volatility of the price, standard deviation.
And how did you derive the volatility? Is it historical?
Yeah.
Yes, from the historical price.
Okay, maybe one quick question from me. To saying whether share prices are expensive or cheap, do you have a data through times, maybe like 10-year time span to show where is it trading at right now? Maybe multiple value, price to earnings, price to book. Can you tell us of how high, how low at the current level? Or what measure you use?
So looking at the 52 weeks high and low, the price varied from 14.6 to 20.35 baht. And then also we perform the alternative valuation, which is like EV to EBITDA, that range from 9 to 20.5. And and then like our DCF is range from 13 to 19.
And how you derive the EV? Is it from historical global trading or from comparison?
Historical global trading, because we think the product mix of the competitor and global is different, so we use historical over global.
But this one is not okay. Like for 50 weeks, high low, that's the share price, right?
Yes.
Okay. And only like 52 weeks. You don't have a chart longer than that to see where is it, right? I thought you have in the beginning of the presentation.
Yeah, on the first slide.
Can I see? Wow, it's up a lot.
Yeah, the IPO actually 2.55
Should we sell it now? Because on a lot of bad things that you're saying is already up like how many percent? Like just over the past many years, it's always on the uptrend, right? I don't know, just something to think about. Yeah. And you should have this kind of valuation multiple, right? And through time. So not only like 52 weeks, probably if you expand it a little bit further. So I get a feeling how expensive, how cheap it is. You cannot tell right now, right? What kind of multiple in the past, where is trading at, like -1 standard deviation, +1 standard deviation, where is it right now?